Hi, I'm Kyle Horn, Executive Director of the Canyon City Area Recreation and Park District. As you know, we are looking to replace the RC Ichabod swimming pool, which closed in May of 2023. Now, public pools are a service. They normally do not pay for themselves. In fact, there are only 5 public pools in the United States that actually do turn a profit. The rest are subsidized because they are a service. And this facility that is being proposed is a year-round option. There's year-round and seasonal components to this facility, but it will take operational mill levy in order to make this a reality. The Recreation District can only ask for questions based on property tax, which is your mill levy. And the Recreation District does have some needs other than just the pool. And we will explain that in just a moment. But the ballot language looks like this. For question 6A, shall Canyon City Area Metropolitan Recreation and Park District taxes be increased up to $1.15 million annually for collection in calendar year 2025 and by such additional amounts raised annually thereafter by an ad valorem property tax imposed at a rate of 4 mils in order to meet increasing operational cost and to provide recreational programs and services, including but not limited to the operation of a swimming pool, and shall the district be allowed to retain and spend property tax revenue above annual limits which might otherwise apply or be proposed, including as an approved exception to the limitations set forth in section 29.1.301 of the Colorado Revised Statutes. Now, what this means is the Recreation District is looking to get operational mill levy increased by 4 mils because operations are ongoing. It will not sunset. So this question doesn't sunset. But the increase would provide a subsidy for pool operations estimated between $320,000 and $360,000 annually. Now remember, pools are a service and they do require subsidy. So this would help pay for the subsidy to make sure that the pool is able to function. Now, only 5 publicly owned pools in the U.S. turn a profit. 2 of them are in Colorado, and they include Waterworld and Pirates Cove. The rest are considered services and must be subsidized. Now, that is not the only thing that this mill levy would provide money for. This would also provide needed assistance for other recreation district operations. The district has never had a mill levy increase, and we do have to pull from reserves to balance the budget. And we have other needs, such as hiring additional staff due to an increase in workload. We also have an increase in day-to-day operations expenses, just like you have budgets at home and at your businesses. So does the Recreation District, and we do need to meet those additional expenses. We all know it's gone up. There's an increase in insurance expenses. And we do need to replace trucks, heavy equipment, things like that. When we go out and get a new truck, it means that it already has 100,000 miles on it. We're able to get a motor grader thanks to Fremont County, but it had 195,000 hours on it. But for us, it was like new equipment, but it had 195,000 hours. We are constantly having to buy very used equipment in order to meet the operational needs of the district where our funding stands. We are one of the lowest funded districts in the state, but despite that, we have still been able to provide excellent services, but we do need additional help. And capital improvements are needed as well to existing facilities. What happens if we need to replace a playground or we have other issues, maybe add an additional pavilion, because we are always asked to do more. We need to be able to meet those needs. So this mill levy increase, which is one of the smallest proposed mill levy increase by any government entity in the last 25 years, would help out the Recreation District in operations of the pool and district operations. Now, what does that look like for your tax dollars? Well, here's some charts. These charts are available on the ccrec.org website. You can see them if you look at the pool section of that website. So the average home in our community is about $285,000. So if we take $300,000, you're looking at a tax increase of $6.69 per month, or $80.28 per year. For commercial businesses, it's basically about 4 times that increase. So at that same $300,000 rate, it's $27.90 per month, or $334.80 per year. But again, these charts are available on the ccrec.org website, and you can look at it and see how that impacts either your business or it impacts your home. And again, whether or not you vote yes is completely up to you. A yes vote means that this facility can be operated. A no vote means this facility, we cannot afford to operate it based on our current funding levels. If you have any further questions, please feel free to reach out to the Recreation District. We thank you for your time and listening to the information about question 6A.